It was Maruti that came out with the numbers, and Yatin Mota joins us to break down those numbers for us. Yatin, so did the numbers meet expectations?
Well, Kamya, if you see on the face of it, the numbers met the expectations, but if you see on the operating front, numbers were slightly below estimates because the operating margins, which were expected to be at 8%, came in at 7.3%, largely impacted due to foreign exchange losses on the vendors front and some bit of forex gains that the company registers on a standalone basis, but they had to compensate close to 200 crores to vendors because of forex fluctuations. Apart from that, their other income shot up nearly 156% on a year-on-year basis, led by higher treasury income and fixed maturity plans profits. So on the other income front, the income was slightly higher, because of which the profits were boosted, but the margins were impacted because of the compensation that they gave it to the vendors on account of forex losses. Their total income came in at 11,727 crores, which was higher by about 16.2% on a year-on-year basis. We had the profit, which came in at 640 crores, almost down 3% on a year-on-year basis, largely because we had anticipations that the operating leverage picture was not very good for the company and the costs have increased significantly on a year-on-year basis. That is why the profits did not grow but deteriorated on a year-on-year basis. But if you see, as I mentioned earlier, the operating performance was slightly dismal. We had JP Morgan and Jefferies, which maintained a hold on this company post the results came in. They have a target price in excess of 1400 for Maruti, and we have BRICS Securities, which maintains the ad rating on Maruti with a target price of 1550. So mixed view coming in from the brokerages, but everybody, if you see the large brokerages, still have a buy or neutral on Maruti after the results.
Right, Yatin. Thanks very much for getting us a breakdown on those numbers there. But of course, we'll have to wait and watch to see how the markets really react to that. But we also had Sumit Chaturvedi, who's managed to catch up with Mayak Parikh, head of marketing at Maruti Suzuki.
There was the biggest skew in favor of diesel because of higher prices of petrol. A lot of customers shifted to diesel. As a result, the percentage of customers who were buying diesel went up from 37 to 46%. As a result, the whole industry had a problem. This, in addition to the fact that input costs were going up and market did not allow any price correction, led to the problem which you have mentioned.
And sir, about 12-13, what kind of outlook will you give in terms of profit as well as sales for Maruti Suzuki?
Yeah. Okay, as far as market is concerned, those tough conditions, or those drivers which were negative last year, continue to remain negative. But the good hope is that interest rate has started falling, and there's a good, I think, encouraging sign for the auto industry. So ballpark, Sumit, we feel that the market should grow between 10 to 12%. That should be the outlook for this year.
Issue which caused disturbance for you in last year was the labor issue. This year you have started negotiations again. What kind of negotiations have started? And can you throw some light on when will you settle the wage issue with the workers?
I think too early to comment anything on this. The things are going on, and we'll let you know when it happens, but it's too early to comment actually.
And you just launched Ertiga. What kind of response the Ertiga has got in the market, and what about some new launches in this current fiscal?
Yeah, I think Ertiga was extremely strategic launch by us. So only 15 days back we launched Ertiga, and already we got more than 20,000 bookings of Ertiga, and the response has been really overwhelming, and we are delighted. And the fact is, it's creating completely a new segment for us is very encouraging sign. As far as future is concerned, see, one thing is very critical is that to sustain leadership, we'll have to continue to be very aggressive in launching cars, which we have been doing in the past, and that will continue. Beyond that, we'll talk when we launch.
There's a concern that the demand in market is for diesel cars, but you have limited diesel capacity. So what will you do this year so that diesel cars you will keep on manufacturing diesel cars, and there's a demand for them also? And what will you do to increase the sales of petrol cars?
I think it's a real interesting question you asked, Sumit. There has been a big skew in favor of diesel, everybody knows, and we are doing a lot of things for that. Last year we had around 240,000 diesel vehicles sold. So this year we have that our Suzuki powertrain, which makes a diesel engine, they have increased capacity from 240,000 to 300,000. In addition, we have agreed into 3 years contract with Fiat India to get 100,000 engines every year for 3 years. So with this year our capacity goes up from 240 of last year to 4 lakh this year. which is 63% up, so which is a good significant sign. But keeping in mind the long-term future and favor for diesel, we have taken some very strategic decisions. We are putting up our own diesel unit in 2 phases. So our capacity of diesel will increase further by 300,000, which will be outlay of around 1,700 crore rupees.